Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, March 4th, 2019. All right, we're going to look at the daily charts, the SPY, QQQ, IWM, and then take a quick look at the 60-minute charts and keep this one hopefully under 10 minutes. All right, so here's that big level. Again, we'll keep focusing on here. Let's put it up with the purple line, and again, that is, let me grab my drawing tools here. Those are the highs from back in last quarter when we had roughly 3 equal highs. These two are almost exactly the same, very close. This one was close enough. And so again, just to recap, we kissed that level for the first time since the bottom on last Monday of last week. And here we are. We've come full circle. We traded above it all week last week, made another run at it again with a much more impulsive failure this time. Last time we just backed off a little bit, and then you could see drop down throughout the week. So interesting. You can see we undercut last week's lows at one point today, but here's that low I've been watching and harping on for last couple weeks, and that's from Thursday, February 21st. We still need to see that low taken out. We'll get to that in the 60-minute chart in a second. So what do we have here other than an impulsive rejection off that level? Once again, we have a bearish engulfing candle. Those are pretty decent sticks. Now what you have to do is wait, or at least in my book, you got to wait and see follow through to the next day. Sometimes you have a bearish engulfing. First and foremost, you don't want to look for them early on in an uptrend. When a engulfing candle comes at the top of an extended or after an extended uptrend, if you get confirmation with another red candle tomorrow, and even better the following day, then it's a pretty good reversal stick. And not just for a quick pullback trade, but usually a swing tradable trade that can last for a while. Just like you want to look for bullish engulfings. It's not that this was here. By definition, all you have to do, you have to have the body of a candle engulf the entire body of the previous day's candle or multiple candles. So that's what we have right now. And we also have it on IWM. I'm going to get to that in a second. So we have that. There's that 50 coming up to test the 200-day from below. That's the 50-day exponential moving average, and the or right here 200-day moving average. So here's our death cross when the pair cross. So by that one trend indicator, and that is just one of many. It's an intermediate to longer term trend indicator. By that metric, it's still bearish unless the two cross. So we have, like I said the other day, that's also resistance. Sometimes you'll come up in key moving average pairs. When they kiss, they act, the slower moving average acts as resistance when the faster moving average comes up from below. So you have that. You have a failure here so far, the second failure. You have the bearish PPO cross, where you have the RSI rolling down from overbought conditions on that real quick. Something that I use over the years. I always say this: overbought can and often does become more overbought. So when you hit 70, that's not a sell signal. When you cross above it, it's not. Usually what you look for, and we've had a couple cross downs, but usually you want to see that cross back down below the 70 level. That's usually when you get any useful information as far as a sell signal goes. And again, it did cross slightly below, but if we continue much lower, let's just say to take out those reaction lows, that will be an additional confirmation, if you will, of a sell signal there. So look for those two lows to be taken out, which would happen if we're going to get confirmation tomorrow or later on this week with this bearish engulfing. But again, let's see if the market remains above this level, and we'll go from there and watch that moving average. One last thing to point out before we leave this chart. We have, again, the third consecutive day. You can see the PPO crossover, the bearish cross on the PPO lines as shown here by the histogram, and that continues to go down, of course, because today was another down day, or a down day, I should say. We had a green day on Friday, but again, it didn't do enough to flip that sell signal in itself back to from bearish to bullish. Before we move on from this chart, let's just look at a few other things, since I mentioned that potential, or that bearish. It is a bearish engulfing now. We'll see if we get follow through, which is really the sell signal. So when you just go back in time, we had a top there that didn't give us a bearish engulfing. Not, that's not a by any means a condition for a top, but we did have one. We had a sharp uptrend here off that lows, big bearish engulfing right there, engulfed that previous green candle, and although it wasn't a very we corrected quite a bit, and then we had another one right there, and that one really did the trick. So that was a decent correction. That was a much bigger correction, the biggest, second biggest in years following that one. And then follow this along. Here's another top there after an extended uptrend with a bearish engulfing. You can see, boom, follow through. The next candle was green, but it never went above that bearish engulfing. Boom, downside. We had bearish engulfing right there. That one didn't pan out for much. I'm just trying to cover them all. And again, you only want to look for them at top. So that's that. And I'll get to the IWM and QQQ charts here. Okay, this is IWM. While I have all the indicators and the trend lines off, that's a big fat bearish engulfing. Came shortly after the highs there. Engulfed not only yesterday or Friday's candle, but it looks like, well, no, we didn't get the body on the previous one. But either way, just something to note. Again, look for more downside, and just go back. IWM, you have quite a few of those around the tops. Let's see, you had bearish engulfing right here at the top. You had a bearish engulfing right here at the top. You had a bearish engulfing right there. It was a pretty short-lived correction, but it was there. You had one right there before this drop down to the lows. Again, pretty decent history, particularly. Oh yeah, there's one more I missed, and another one right there. All right, so again, something to watch. If you can see some more downside here, IWM is well above the 250, but they're not even close to crossing yet. They give you a death cross here. A bullish cross would be a golden cross if the 50 can get back up there, but that's not going to happen anytime soon with the distance between the two of those. And QQQ pulled a little stick save today, down most of the day, to rally back flat to the close, slightly positive 0.002%. So that's a flat close. Closed right here at right where that reaction high from that kickback rally there was. We had a couple reactions here and here, and a big reaction high from back in early 2018. So that's where we closed on QQQ. A couple notable developments on the 60-minute chart. We had this, here's that trend line off the lows, the reaction low from the 27th. That was already broken, back tested. Again, Qs are just walking mildly higher, as I've covered many times recently, that, at least from some comments that I'm seeing on YouTube channel, even the site, there seems to be confusion about this market melting up. The market had a melt up, and that was off the lows on the 24th until the highs on the 28th. If you look at the pop-up box to the left, you can see that was a 15.5% gain, and that was again the peak on the 18th. Then we had a correction, more so in time from that point, so about 16% to where we closed today. The market is up. At a little rally, we're down below 5%. Now we're right about 5%. So again, that's 75% of the gains on this rally were made in the first, I think that's 17 trading sessions, where only a quarter of the gains have been made since. So while the market is extremely resilient, not going down, it is far from in a melt-up type phase. It's only gained, again, 5% since that peak back on the 18th of January. Try to put that 5% gain that happened, over a month and a half, almost 2 months now. Here's a point back in the early part of the sell-off where we dropped almost that much in one single day. There's a 4.5% drop right there in QQQ. So again, it's the same story. I mean, it's an extremely resilient trend. The momentum is waning, but that is the point. The momentum is waning. The slope of the ascent is decreasing. Sharp, starting to do this. So we'll see where we go from here, but that's the story. We have the markets at resistance. Now let's look at what I just showed you. I started the video out showing you QQQ and IWM, the big bearish engulfing candles on them. So what I noticed today, throughout the day, it was really, and I've talked about this many times, you can look it up, the weighting on these top 5 stocks I refer to as the FANGs, F, A, M, G. the two Googles or alphabets. Those are the FANGs, and then I say FAME if I include the Intel there, number 6. Those make up the bulk of the returns for the NASDAQ 100, and you can see that's what lifted the market. In fact, I've shared this years ago. There's a video on it somewhere on my YouTube channel and on the site. I've come up with my own measure to look at real-time internals. You know, it's hard to get. A lot of brokerage platforms don't even give real-time market internals. I'll update them every half hour or so, sometimes end of day, and then you only get the NYSE, which nobody follows, or you get the NASDAQ composite, not the NASDAQ 100, not the S&P 500. So I've come up with a way to get real-time internals. Just go like this. This is a watch list. This has every component of the NASDAQ 100, the QQQ. So what I do is I'll sort by percentage change. Go down here, scroll down. Now I had to truncate this list because to keep it in the video. You can see there's 38 of 104 items. So there's it's actually 103 stocks in there because they count QQQ. You can see it right here in the list. That makes it 103. You have a couple companies like Alphabet, they have 2 share classes, GOG and GOGL. That's why it's not exactly 100. But so all I have to do is click on Fox A. That's the lowest. That was almost flat, but it's green. We'll call it green. And that tells me 37, only 37 of the 104 or 103 components of the NASDAQ 100 are green today. And you can do the same if you want to see the red number. Of course, you can subtract it. We had a couple flat. Scroll down here to this point right there, PepsiCo, and it shows that 66 out of the 103 were down. So that's negative breath. And again, I don't have to pull that up to see when I again sort it back by market cap, which I had it on before. And that's how I usually keep this list sorted. You can just see that take out Amazon, and just take out Facebook alone today, and you'd have a red close. So I just wanted to point that out. That's not exactly confirming breadth. And again, why am I doing that? Obviously, I've been building a bearish case lately. I'm no doubt about that. But to show you, we had some clearly bearish closes in SPY, which is the market, and the Russell 2000, which is roughly 2,000 companies, and they are much more. I don't think the top component of IWM is even more than 2%. It's a much more balanced index, as is SPY compared to QQQ. Couple of trend lines for you SPY traders to watch, and this is the one I'm watching off the 27th lows. That one's already been broken. Sideways trading, but still below that trend line since. Like I said, divergences are not sell signals. They're merely an indication of a trend reversal, and we continue to diverge high. That most recent high we popped today was simply an extension. In fact, the divergences are getting even more steep at this point. You can see it dropping off there. And then impulsive selling, which took out, you can see I have a trend line right here. This is a minor trend line. That was taken out impulsively, and the same level I've been harping on now for almost 2 weeks, the lows from Thursday the 21st, that needs to go, and I've labeled those 276.35 on SPY, and then I have on QQQ 170.71. Again, that's last Thursday's low. Want to see those get taken out with conviction. And finally, because you need to do that in this market, like I said, it's the trend is still higher, but it's it's a slow grind higher at this point, and but very resilient. So you want to give it the benefit of the doubt. Let's identify as many support levels and trend lines as we can that may be significant, and there's one on SPY. Lots of reactions actually, so I thought it was worth mentioning this one as well. And again, there's that low from wherever it was last Wednesday, right around there. Okay, we'll wrap it up with the futures. This is ES, the S&P 500 E-mini futures, 60-minute chart. There's your low, kind of capitulation, waterfall selling, and this is where trend line starts on the 27th. We'll zoom in a little bit tighter, and you can see here's a little minor uptrend line. This was the primary trend line from the 27th that broke. And like back after that January 18th top, so far we're correcting sideways in time, and that, look, could it continue and that might be all we get and then take off? Absolutely, that's possible. But it doesn't mean just because we haven't rolled over yet that we can't go down and start correcting in price too. Well, we'll see what happens. But there's the trend line break and back test. Again, that was the primary trend line I was watching off the 27th. And there's a pretty significant level, and you can see SPY popped, or ES popped it intraday today. This blue line values at 2784.50, and it came in. It also broke this up, the minor uptrend line, and came back and back tested it, and we parked right under it. So it's a level for futures traders to watch. And again, there's that big level, which I think is important. That's that low from Thursday before last, and that's at 2763.50 or so on ES. Finally, let's look at NQ, and we will wrap it up here. There's NQ, same trend line off the lows from the 27th right there. Zoom back in a little bit. You can see it was broken at this point. Broken here, back tested, and since then we've kind of moved mostly sideways to slightly higher. Let's call it a price channel right here. Let's look, because there's enough reactions now on this line to make it worth watching. There's a couple reactions for you, including one today. Gives us a nice parallel price channel. The divergence is still very much intact at this point. So same story. I know some of you might be getting tired of hearing it, but look, patience pays in the market, and these are the levels I'm watching. So let's see if those go tomorrow. Let's see if we get follow through to the downside in IWM SPY, or will it be more of the same? We'll see. I'll follow up if we get any significant developments tomorrow. Maybe do an intraday video, or at the very least end of day market wrap. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed.